5 index funds to invest in for 2026, covering both India and the US. In 2026, real wealth isn't going to be built by just randomly guessing. It's built through solid structure. So let's dive right into the 5 key index funds that basically map out a complete, bulletproof global and domestic strategy for you.
Let me ask you something. Why is someone else building more wealth than you? You probably work super hard, save diligently every month, maybe you even actively trade. Yet, there are these systematic investors who are just quietly outperforming you over the long haul. It's frustrating, right? But why exactly is that happening?
Well, here's the reality. While the crowd is out there frantically chasing hot stocks, smart capital is just quietly flowing into index funds. Look, if creating wealth was as easy as throwing cash at some social media stock tip to become a billionaire overnight, we'd all be on yachts right now. The secret? You absolutely do not need to predict the market. You just need to systematically own it.
Starting off our list at number 5, we have the UTI Nifty 50 Index Fund. This is your baseline of stability.
Think of this fund as your VIP, all-access pass to the Indian economy. By holding this, you instantly own a piece of India's massive banks, the IT giants, and those big FMCG leaders. It's essentially the anchor of any serious portfolio. Why? Because it literally insulates you from all that crazy noise of symbol stock volatility. No more waking up in a panic over one company's bad quarterly earnings report. Instead, you're owning the top 50 companies running the show, which translates to a much, much lower stress baseline for your hard-earned capital.
But hold on a second. What if you miss the next generation of giants? There is a real limitation to only sticking with established, older companies. What happens to your wealth if you completely miss out on tomorrow's market leaders right before they hit their massive peak?
That brings us to number 4, the Nifty Next 50 Index Fund. This one is all about capturing those future leaders.
Think about it like this. If the Nifty 50 is the VIP section, the next 50 is the waiting room to get in. These are the aggressive, fast-growing companies. Today they're scaling up, right? But tomorrow, some of them are going to become those giant untouchable market leaders we just talked about. Now, to be totally transparent, this fund definitely carries more volatility than the top 50. It's going to bounce around more. But if you have a longer time horizon, well, time is exactly the secret ingredient that converts that short-term bumpiness into really substantial long-term wealth.
Now, all of this raises a pretty critical question about your portfolio's borders. Will India alone create all future wealth? Should your capital stay entirely at home? Or should it pack its bags and travel a bit?
To answer that, we look at number 3, the Motilal Oswal S&P 500 Index Fund. This is what gives you that crucial global edge.
Just think about everyday mega brands. Let's be real, you probably use Google daily, right? You watch Netflix, you buy stuff off Amazon. Yet it's kind of crazy how many domestic investors never actually hold any equity in these companies. Adding this slice of US exposure isn't just about chasing global growth. Actually, it's a completely critical hedge for currency diversification. It protects your purchasing power if the rupee happens to weaken over the next decade. Ultimately, it's about systematically owning the exact tools that you already consume every single day.
Moving on to number 2, we're shifting gears to the Motilal Oswal Nasdaq 100 Index Fund. This is all about high-speed tech acceleration.
So if the S&P 500 is your broad slice of the American economy, the Nasdaq 100 is a highly concentrated bet on the digital future. We're talking AI, software, massive tech innovation. But I gotta warn you, a lot of investors mistakenly view tech growth as like easy money. It's not. This fund moves extremely fast, and trust me, it can correct very sharply. It will literally test your patience. Because at the end of the day, sustained wealth in the tech sector almost always rewards emotional discipline way more than just pure intelligence.
Okay, let's recap for a second. We've got stability, we've got future leaders, global giants, and high-speed tech acceleration. So, what is the hidden growth engine most people ignore? What is the ultimate multiplier, perfectly capturing India's massive domestic runway?
Coming in at number 1, the Nifty Midcap 150 Index Fund. This is the missing piece of the puzzle.
These 150 companies sit right in the absolute sweet spot of the market. They're bigger than startups, so they have proven business models, but they aren't those slow-moving giants yet. These guys are the actual gears driving India's infrastructure, manufacturing, and the booming digital economy. Now look, yes, they will fall harder during terrifying market drops, but disciplined investors use that exact volatility to capture massive structural growth early in the cycle. Sticking with them is absolutely worth it.
All right, so how do we bring this all together? Let's look at synthesizing these 5 funds and building the ultimate portfolio.
Here's the thing. Buying isolated random funds doesn't build wealth. Having a cohesive, purposeful dashboard does. The strategy maps directly to the engine you're using. We use India for solid baseline growth, the US for global exposure and currency protection, mid-caps for rapid acceleration, and large caps as your stabilizing anchor. When you put it all together, it's basically a simple, perfectly balanced, completely unemotional machine, and it is custom designed for long-term compounding.
Now, actually executing this plan requires 3 strict non-negotiables. Step 1, setting up an automated monthly SIP. Just set it and forget it. Step 2, unwavering patience, especially when the markets go flat and get boring. And step 3, the discipline to ignore all those shiny, tempting distractions out there. Honestly, the biggest financial mistake you could possibly make right now isn't picking a slightly wrong percentage for your allocation. No, it's waiting forever to just get started and deploy your capital. Because at the end of the day, time is the one asset you never get back. Earning money is one thing, sure, but taking action to set up a systematic, unemotional portfolio, that is how actual generational wealth is built and kept. So the real question here isn't whether you can afford to build this portfolio today, it's whether you can afford to let another year just pass you by. Are you ready to start your